What's up, guys? You guys seem to really like the idea of me sharing a video on my trade setups from today's session. They're essentially the same setup, but just kind of used uh, in different ways. It's like when one setup fails, it allows for another setup to present itself. So, um, it's the same idea, the same thesis and concept, but you could try the first one, and once the first one stops working, you can flip to the second one. So in this case, I was trying shorts for today's session because we kind of sold off in the morning. We uh, kept our value from uh, kind of shifted value from yesterday's session. Uh, And what I mean by that is the entire value area is below the prior day's value area. So say if yesterday's val was 61, I don't know what it was, but say it was 61.35, and today's value area high is, or however you say it, today's value area high is 61.23. That would be defined, they don't overlap. The value areas do not overlap. So that would be considered a bearish shift value. And the way I want to trade that is essentially to look for shorts near the value area high or above it, uh, until the value area high is flipped into support. So initially I'm trying shorts, and that's what I did, and I was able to scalp. And keep in mind that these are my trades are completely scalp trades now. I don't really have the patience to hold, for uh, to 12, 20, 30 points anymore. The intraday, fluctuations and flows are just not very kind to people who hold for, many points. It's a lot of whiplash and a lot of back and forth, and a lot of patience required to, to catch, 20, 30, 40 points. So I'm taking minimal risk, basically just looking at the order flow, um, taking 1, 2, maybe 3 points of risk, and then trying to just cash, 4 to 6 points and maybe 8 on occasion. But uh, let's just go ahead and explain the setup. So the setup today, um, I'm just looking for signs of selling anywhere near or above the value area high, and so if we go ahead and look at the footprint chart, I have a delta footprint chart because that's the most visually pleasing way that I have found to look at the order flow. Of course, I have a depth of market on the left, but I really like the way the footprint looks, the delta footprint looks. I have my imbalance percentages set to 300%. So anything in yellow that pops up is a pretty hefty imbalance. So as you can see, there's a 193 lot clipped into about, what is that, 27 and a half on ES. So that is a pretty hefty imbalance there. So that could be a sign of selling. The idea behind absorption is, you want to see absorption on either the bid or the offer, and then once you see uh, aggressive buying or selling coming to market, that is when you want to enter. So you're on the offer. Say here at one, you have 193 lots on the offer at 27 and a half. You want to see before you start, just clipping in and selling the market. You want to see sellers selling it, and then you join with them. So that's exactly what I did today. Initially, I tried shorting. I think it was 25s and halves, and then I got stopped. But here we go. Okay, so you see the sellers aggressively coming to market, 138 lots, 134 lots, at 25s and 25 and a half. So what I want to look for is for this area to be defended. So you already see them coming to market, and as long as they continue to defend the area where they've entered and started aggressively selling it, I want to stay in the trade and be a seller. Now I'm taking about 2 points of risk because I don't think as long as this area is defended, I don't think it's going to come all the way back up to the absorption area at 27 and a half. So I'm giving myself about 2 points of risk. And I want to this is essentially a fading setup because you're not seeing the buying, really sustain above the current value area high, which is about 23 and a half. You're actually seeing signs of absorption on the offer and then sellers coming to market. So that is a sign in the order flow that we are not going to hold above the value area high for very long. So we want to go ahead and fade the market. And I only want to look for maybe 4 points on this trade, which is about 2R. You could try to hold for more to try to target the VPOC, get a little mean reversion trade back to value. But you have a much higher, you'll have a much higher winning percentage if you just, you take gains a lot faster. You can kind of just let those wins compound, and you just keep pressing size until you can't anymore. It's not about how big your winners are. A lot of people, glamorize 20, 30, 40, 100 point winners, and that's not trading. That's more marketing than trading. So I really respect the guys who come in day in out and don't really try to play hero, because I myself have found myself try to play hero, just to kind of impress people, but that's not real trading. That's just trying to be flashy and make more money than you're really entitled to. So we're in the short now. I put in a bid at 21 and a half because that's where my 4 point target is. They continue to defend the area where the aggressive sellers stepped in, which was 25s and 25s and a half. Now, I don't really have to hold this trade until my stop hits. If that area starts to go bid and we start to hold the bid there, I would be happy to close the trade out. Now, we just saw about 238 lots clip in on the offer, or buying on the offer at 24 and 3/4. So could not bid above that. So that's another sign of absorption on the offer. So that's a sign that we want to continue to hold this trade. That's a great sign and a great indication that we are going to be on sides in this trade, and we want to hold it to our target. And it looks like we're about to get filled at 21 and a half. And that, ladies and gentlemen, is an order flow scalp that took maybe 5 minutes, if that. So that is looking for sellers above the value area high when the session has had a bearish shift in value from the prior day session. Now, I took this trade initially. I got stopped out minus 2 points, and I re-entered again because I saw those sellers stepping in. So it's all about you can be wrong on the timing as long as you get back in when the timing is right, and that's super important because it's easy to get discouraged and give up on the trade, and then the market goes without you. It's very important to keep your stops tight and know when to re-enter a trade when it's ready to be entered in again. So here's the long setup. You kind of see the absorption on my dome. So see my mouse is on the right side of the dome. You see there's a lot of selling. But my trade was essentially I want to be a buyer above, as long as we showed signs of buying above value area high, and in this instance it's 61.26. So you kind of see on the candlestick, you see the wicks off of 26, and just kind of we did this big blue candle. We closed above the value area high on the 15-minute, and then you kind of tell that like all the selling that's going on here is being absorbed because price isn't really budging to the downside, and we're not really seeing signs that we want to get back below the value area high. So just kind of have this bullish consolidation above. So see, I just got filled at 29s. Why 29? Well, there was some buying on the footprint. I can't really show you because my footprint chart's being a little bitch, not gonna lie. So I can't really show you. Yeah, it's not loading all the data. So, but if you could see it, you'd see buying on the offer. You see aggressive buyers coming to market and just taking out all the offers. And there's a pretty big imbalance on the buy side at 28s, 29s. But you could see it on the candlestick. I mean, you see the blue candle that closed above 29. And see now, I want to take this off at 35s because I took a 3 point stop and I want a 2R trade on this. I only want 6 points. So this is pure scalp, just buying once you see a bullish formation above the value area high. And remember in this context, it's when you want to be short and you see signs of selling, but once that selling kind of exhausts and the buyers step in, that's when you want to flip. You can see these wicks. You see this prior resistance, and I shorted this area before, and then we sold a little bit, but then the we saw this big wick, and we closed back around 24s, and then this big candle to the upside, closed above 29s, and then we flipped this prior resistance and the support. And see now it finally filled. That's plus 6 points. I took a -2 earlier in the day, and then I took a +4 and then a +6. So I'll close the day up about 8 points. And yeah, that's essentially the trade, guys. I mean, it's essentially a value area high. Uh, Using value area high as a kind of pivot when we see a shift in value from the prior day, what it looks like on the tape, uh, and then what you want to see once you're in the trade. I mean, I kind of explained here on the right, we have this delta imbalance. You see all the selling that was happening, all the red, all the negative delta was was being absorbed on the bid, and you know that because price isn't budging to the downside. So when you see a lot of selling, a lot of sellers coming to market, but price isn't going down, that's the key. And then once you see the buying finally, start to kick in, that's when you enter. And so that's essentially the trade, guys. Hope you enjoyed. Thanks for watching, and let me know if you have any questions. I enjoyed making this. Thanks, guys.